Maximize your savings, understanding certificates of deposit, CDs, and important guidelines by Reserve Bank of India. Glowing Star today, we are diving into the world of certificates of deposit, CDs, a must-know for financial exams and smart investing. Glowing Star. Certificates of deposit, CDs, are financial tools issued by scheduled commercial banks, excluding RRB and local area banks, and certain all-India financial institutions authorized by the RBI. These CDs are available to a broad spectrum of investors, but non-resident Indians, NRIs, are restricted to investing in non-repatriable CDs and cannot transfer them to other NRIs. For banks, the maturity period of CDs ranges from 7 days to 1 year, while for financial institutions, it can be between 1 to 3 years. There is no grace period for CD repayment. If the maturity date is a holiday, banks must pay on the preceding working day. The minimum investment in a CD is 1 lakh rupees, and subsequent investments must be in multiples of 1 lakh rupees. Banks issuing CDs are required to maintain cash reserves, including the cash reserve ratio, CRR, and statutory liquidity ratio, SLR, based on the issue price of the CDs. Importantly, banks and financial institutions cannot offer loans against CDs or buy back their CDs before maturity. For physical CD certificates, the final holder can present it to the bank for payment through a cross-check. For dematerialized CDs, investors must coordinate with their depository participant and provide transfer and delivery instructions while informing the bank about the preferred payment receipt method. Banks and financial institutions must record CDs under CDs issued in their deposits and handle discount entries similar to cash certificates. They should also maintain a detailed register of all issued CDs. The Fixed Income Money Market and Derivatives Association of India, FIMDA, with the RBI, may establish standardized market practices and documentation to ensure consistency and reliability. Banks are required to report the amount of CDs in their regular reports under Section 42 of the RBI Act, provide additional detailed reports on CDs within 10 days at the end of every 2-week period. These regulations around loans, buybacks, payments, accounting, and reporting are designed to maintain the integrity of the CD market and ensure its smooth and fair operation. CDs offer a secure way to deposit money for a fixed term with a guaranteed interest rate, along with the option to transfer ownership. Banks use CDs as a mechanism to raise funds for lending, especially during periods of tight liquidity, under specific guidelines and regulations set by the RBI. Bullseye. Subscribe to Soham B's Finance Academy for more insightful content on finance and ace those professional exams with confidence. Hit the bell icon to stay updated on all our latest videos. Your support through likes, comments, and shares keeps us motivated to bring more valuable content to you. Don't forget to check out our playlist for more videos on financial concepts and exam preparation strategies. Join our growing community of finance enthusiasts and take your knowledge to new heights. Thumbs up, like, share, and subscribe to help our channel grow. Together, let's reach new milestones in financial education.